Hi friends, I'm back with one more video. So today we will be discussing about the debit spread, right? How to convert the loss-making trade to profit by converting it to ratio spread. Sorry, this was right. Converting it to ratio spread. Okay, so this will be the continuation video of yesterday's, that is part 3.1. Right, I already made a video yesterday wherein we converted the loss-making debit spread to profit, right, by converting it to naked selling. So this is a continuation, right? This is one more thought process. Okay, as I said, adjustments are very dynamic, it is not static. As and when you come across with your own thought process, right, just make a rule book and document somewhere. So based on the market conditions, you will have to get them implemented. Okay, so this is continuation of 3.1. So I would recommend you to watch this 3.1 and then watch this video. And friends, right, I made a series on debit spread, like entire series on debit spread end to end series with all the possible adjustments, right? I'll ensure that, as I promised, I'll ensure that I'll keep on adding all the videos. So we already got up with almost like 13 to 14 videos, right? This is very important, prerequisite 1 and 2, right, followed by part 1, part 2, part 3. So we have uh, I made a video on all the adjustments, how to mitigate your loss, how to lock your profit. So I would recommend you to watch this series. Okay, let me come back to the trade. So this is our debit spread. This is a continuation of yesterday's video. I'll be not explaining all the logic. So I'll do the adjustments when my debit spread premium will become 120, because we gave 220 premium and we got 97. So net we are 120 rupees debit, right? So whenever my buy leg premium becomes 120, I'll do the adjustments. Okay, so I've taken the recent example. All right, 12th is the expiry, 12th May, and 5th is the start date. Let me go to the end of the day, right? 120, it is 175, so we will be not doing the adjustments. Next day morning, you all know, right, we had a gap down. Okay, we had a gap down. So what did we do yesterday? Whenever we have the gap down, obviously our trade will be in loss, because the buying leg as the theta decay, the premium decay, right? I'll exit this buy leg with the loss of 3,347. All right, I'll exit this now. I'll keep this sell leg position open because even if the market keeps going, my maximum loss would be 912. I've already explained you everything in this video, friend. Everything in this video. This is a continuation of this video. Please watch this video. All right. So now my downside loss is fixed. 912 is my downside loss. Right. I have the protection till 5%. Look at the red box, right? I have the protection till 5% on my upside. Yes, no doubt, if we get a quick momentum, we'll get into loss, but we need to take a chance, right? There is no holy grail. So you have to decide now, looking at my debit spread adjustments, all the adjustments, you have to decide in terms of making this blue line flat. Okay, so now let me take you to the next day. So we have a loss of 1861, right? Let me take you to the next day. All right, so next day market has fallen down again. So now check the gap. We are safe till 7%, almost 7%. Our break even is 7% on the upside. All right, that means market has to move 7% for us to start seeing the losses. Now what did we do in the earlier video? We just left it as it is, right? But now what we'll do is, now see, how about deploying a ratio spread? What is ratio spread? One buy and two sells, that is a ratio, right? What do we say ratio spread? Let me explain you what is ratio spread, right? 1 is to 2, right? 1 is to 2 is your ratio spread, right? We have one buy position, we'll get one buy position, and we will have two sell position. One buy, two sell position, this will become your 1 is to 2 ratio spread, and this is on PE side, because our testing side is PE side, right? We have to deploy a ratio spread on PE side with 1 is to 2. Okay, this is very simple, friends. This is very simple. Where does the market stands? 34,100, right? Market is standing at 34,000, right? If you look at the future for 34,100, it all depends on you. So I'll deploy a debit spread, sorry, a ratio spread at 34,300. I'll take a 200 points difference. See, it doesn't make sense. Even you can go for 34,100 or 34,200. I'll deploy at 34,300, 300 by just giving the because I'm still expecting market to go down, right? If it goes down, so I'll get some additional premium, right? I'll deploy a put debit spread, that is like I'll buy this. Okay, I'll buy this with quantity 1, right? What did I say? Debit spread is like 1 buy and 2 sold positions, right? So I'll take like 300 points, 1 2, right? 1 second, 34, what was my, sorry, not 34,000, I did a mistake. I'll delete this. I'll go for 34,300. Sorry friends, right? What do we do? 34, yeah, 34,300. I will buy this, right? I bought 34,300. To make it ratio spread, I'll just take a 300 gap, 1 2 3. I'll sell two quantity of 34,000 to make it ratio spread. Okay, two quantity. All right, your graph will become something like this, right? The beauty is you are safe on your call side and you have some range on the put side also. See, view is very important. View is very important. So let's say if your view is like market will keep going down, so that doesn't make any sense to go for ratio spread. You can just keep the sell position open and do not even deploy the ratio spread. Friends, view is very important. But let's say because you have deployed your original debit spread with a view of market going up, right? Your view was market going up, but the next day morning market made a gap down, right? That doesn't mean that market will go bearish, right? But maybe there was some bad news, right? That particular day market had a gap down, but still your price actions or your open interest or affairs are still buying, right? So based on the parameters, if you still feel like okay, market will be like sideways for today, and maybe I think market will go up because already market has made a very downfall. See, I'll just leave it to you. I'm just telling you a way, right? The adjustments, the shiftings are not static. I'm just telling you a view, right? The moment you convert it to ratio spread, see, 1 buy and 2 sell, right? You have a safety of around like 300 to 400 points on the downside, and also your call side is safe till almost like 7.3%. All right, now what shall we do? This is your, now your loss is only 1,280. The original loss was 3,500 in your debit spread. Now now though this shows unlimited loss on the call side, on the put side, and unlimited loss on the call side, right? But call side is very safe, right? You have to think only about the put side. So let's say if the market keeps going down, right, you can do the adjustments. I mean, just go to my debit spread playlist. You have all the adjustments over there. Okay, now your loss is 1,280. Let me take you to the next day, right? See, market went up as we thought, right? Market went up, right? Though we had a gap down yesterday, but the next day market went up. You are straight away into profit, 3,197. You can exit your trade if your target is met, or else if you want to continue, you can just hold the trade next day, because we are on 10th May and 12th May is the expiry, so we have 2 more days. Let me take to one day, right? You are in a profit of 4,860. We have one more day for expiry. We are on 11th. Okay, let me take you to the next day. Right, you are straight away into the profit of almost 6,000 on expiry day at 9:20. I'll leave it to you. So if you want to book the profit, go ahead and book it, or else if you want to wait till the expiry, you are very safe on the call side. No doubt you can wait, but on the put side, your loss will start if the market makes a move of 1.89%. Check the red color box. If the market makes a move of almost like 2%, your all the loss will go into vanish. It will vanish and you will get into loss, right? Let me check. Let me show you like what happens if you go to till the end of the day, right? 30 minutes, because 12th May, 30 minutes, 30 minutes. I'll just take it to end of the day. We'll see what happened to the market. Initial profit was 6,000, right? Check. If you did not book your profit on the expiry day, your 6,000 profit has gone to 1,062. This is the way we need to book the profits on the timely. Even you do not even, that we might have the gamma effect. It is not recommended to wait till the expiry. See, I'll take you at 1 o'clock. We'll see what happened. At least 1 o'clock you can take a call, right? see 1054, or else we'll check for what. See, we had a profit of 5200 at 120. So doesn't it make sense to book the profit? Rather, I would say you can just book the profit on the expiry day in the morning itself. Because see, I'll take you to see, I'll take it to 920, right? Just book the profit at 920. I mean, 6,000, right? It's a huge profit because you have deployed a debit spread which went, right, against your view, and then we converted it to ratio spread. Now you might be having a question, right? What profit or loss my debit spread would have given? So I'll do one thing. I'll just delete this leg. Okay, I'll delete this leg and I'll make it to 0. Let's see what the original debit spread add all together, right? You would have been in a loss of 3,000 by just converting it to ratio spread, right? You have mitigated your loss 3,000, and then not only that you got into cost to cost, but also you got into 6,000 profit by just converting, right, your debit spread to ratio spread. See, there are n number of adjustments, friends. Believe me, I'll just come up with many more adjustments. What See, adjustments are not static, right? Do not uh, I mean, how should I tell you, right? Adjustments should be like very dynamic. Do not apply the same adjustments into all the market conditions. It all depends on your view. It all depends on the current market condition. It all depends on what FIs are doing. It all depends on where do you see the open interest getting accumulated, right? What does your price action says? What does the chart says? Do we have any bad news? Do we have any events like budget or your election? Right, there are so many parameters, but don't make your trading style very complicated. Make it very simple. But your view is very important for the debit spread, because debit spread is all about direction. Be it upward, be it downward, you need to have the direction, right? In case if it goes against your view, see, it went against our view. We deployed the debit spread, bullish debit spread, but market came down. By just converting it to ratio spread, right, 1 is to 2, we were able to mitigate the loss, and also we came up with 6,000. I'll not give importance to my profit. Whenever my view goes wrong, even if I make this 0, or if I make this minus 500, I'll be like very happy, because protecting my capital is my prime goal, right? Whenever the view goes wrong, protecting my capital is my prime goal. I'll not even look out for profit, but still I'm just showing you how we can get into profit by doing the required adjustments. If you go back to my playlist channel, right, see, I've told you everything, how to see. This is like how to, this is very important, how to convert the loss making debit spread to strangle, right? We have discussed already, right? And this is, right, how to convert your loss making debit spread to profit by converting it to naked selling. We have seen that, right? Naked selling. And now this video is continuation of this video. Rather than getting it to see naked selling, how much profit did we get last time? Let me show you. Right, we were able to get some, see, if you look at the right, we were able to get only 68 rupees. That's it. We were able to mitigate the loss. That's my prime goal. But now, right, we have done the same thing. See, we have squared off this leg, and we let this sell leg open, and then we sold a call, right? We sold a naked option, so we were able to mitigate the entire loss, and we got up with only 68 rupees. But in this video, what did we do? Right, let me take you to Opsta. In this video, what did we do? Sorry, I've just deleted. What did we do? We booked this leg, we let this leg open. The next day, what we did, we have converted it to ratio spread, right? And then we saw a profit of almost 6,000. All right, friends. So, friends, please subscribe my channel. It will take like 1 second for you to subscribe my channel, and also please share with your friends, especially with those who are new to trading, right? I mean, because I mean, I do care for all the new traders, right? Even I am very new trader, right? Protecting the capital is very important. Like, market is not an ATM, right? Do not treat market as gambling, right? You need to spend, you need to give time to market in terms of exploring, learning, right? And then you need to deploy your capital. Please share with all the new traders, and also this will be like very much helpful for all the experienced trader who do not have their own trading system or style. All right, thank you, friends. Thank you for watching my video. Please subscribe my channel and also share with your friends. Thank you.